With the markets tumbling, crypto crashing and Nasdaq falling, where exactly should you be placed in the market? Should you be risk on or risk off? In the next 10 minutes, I'm going to give you the exact news events that's driven this market. I'm going to give you the exact charts that are falling and where they should be bouncing off from. And I'm going to give you some great setups that you can execute yourself. Welcome to Squid Traders. Tick tock, tick tock, tick tock. 33 days, 5 hours and 9 minutes to the next FOMC meeting. We already know they have cut rates by 25 basis points in the last meeting, but what can we expect from this one? Well, there's a 95% chance that there will be an October rate cut. Whether it is 25 basis point or whether it is 50 basis point, doesn't matter. The chances of a rate cut are high. But the problem that we face is that Fed is never early. We all know that. They are always late in the cycle of rate cutting and rate hiking. And every time Fed has cut rates, whether it be 1980s, whether it be 1990s, 2001, 2007, 2019, the rate cuts has led to a recession. But this time, it's not different. It's worse. Why? We have a president in play who is putting tariffs on every single thing that is there. There's a 100% tariff on pharmaceuticals, 50% on kitchen cabinets, 50% on bathroom vanities and associated products. That means your toilet paper is getting expensive, 30% on furniture, and 25% on heavy trucks. He does not understand the problem of obesity is not because of heavy trucks, it's because of heavy people. Put tariff on them, not trucks. But with all this happening, S&P is still 105.3% up over the last decade. So that's 2019 to 2029, still 4 years or so to go. But 105% in the last 5 to 6 years, not bad. The previous decade gave us 189.7%. And the best decade year to date has been 315.7% gains. That's 1989 to 1999. Can S&P do the 200% return this decade? Quite possibly, yes. We are not too far away from that. And looking at all those things, we are guys in Q4 of the year. Q4 is mostly the most green time to be part of any risk on asset. But one thing is for sure, October and December sometimes are not. On average, they have been down for S&P 500. But whenever you have seen May, June, July, August and September, so that's Q2 and Q3 period, to be green, November has always given good results, and November is mostly the most profitable month for S&P 500. So with that being said, let's just look at the charts and see where we are in terms of S&P 500, Nasdaq, Dow Jones and everything. Looking at S&P 500, we are basically trading very high above in premium area. We have tried to basically sweep these lows and we were not able to, and there's been a very good reaction today from the lows. But I'm still expecting price to kind of dip into discount, give us a good move from there, because buying anything in premium is not what we are taught, right? Wait for the sale to happen, and the sale will happen. So I'm looking forward to S&P basically going in the 6600 areas, just below 50% of this range, and that will be a good buying opportunity for me. Nasdaq has already dipped inside of this order block. So the order block that we were looking at on ES is a bit lower compared to Nasdaq. And Nasdaq has already put its head inside of this order block. Now, if Nasdaq can play out from here, if Nasdaq can start performing, start showing some sort of bullish price action, I would be looking at a change in state of delivery most likely at this point. If we can close above this area, that will give me an indication that Nasdaq wants to go higher towards the 25,600 area. So let's wait and watch and let's see how this day closes and how this week closes overall to give us a more of an indication of where Nasdaq wants to travel. Looking at YM has broken out of this uptrend now. So we are no more in this uptrend. We have broken out. Is it a deviation? Is it a confirmed breakout? We are yet to see. But this has happened after the sweep of the previous all-time high. The target for the inverse head and shoulder, which was down below over here, so this is the shoulder, head and the shoulder, is still way beyond this current price action. So that's around 49,000. So we are still 3,000 points away from it. So it's wait and watch time for Dow Jones to see where it wants to go. I would say some sort of a correction and then going higher makes more sense. And if it is a deviation and we can finish the candle inside of this uptrend again, that's a beautiful long with the stops being below 46,000 area. Moving on, all these things said, rate cuts are happening, tariffs are coming in. What moves the market? The market is moved by liquidity, and the M2 money supply has surged by 5% year on year in August. $22.2 trillion have been added. Where will all this money go? All of this money is going to end up in different risk on assets. And this sort of money supply increase leads to increase in risk on assets, right? So what are the risk on assets? Obviously Nasdaq, stocks, but on top of that, crypto. So let's look a bit at crypto and see what's going on there. So the first thing that comes to my mind is the range and the seasonality of this chop. So Mr. Heisenberg says that BTC is just going through this typical seasonality chop, not a big deal. Agreed, not at all a big deal. 100 to 105k this year and he'll be buying, I'll be buying. But what does the chart say? The chart does agree with Heisenberg. We have been rejected from this weekly fair value gap right over here, but we are still trading above this inverse head and shoulder on the weekly time frame as well. The target of which is $150,000, and I'm looking forward to it. I'll be buying once we have swept these equal lows, and if we can show some sort of bullish price action out of it, that's a buying opportunity for me. But not everyone loves Bitcoin, right? Some people like altcoins, some like Ethereum, some like Solana. So let's talk a little bit about Ethereum. Now Ethereum, everybody was excited about this alt season that just happened. And they were like, alt season, alt season, alt season. It was not really alt season, guys. It was ETH season. And right now, ETH has been most oversold since the April crash, right? And looking at the chart, it does play out very well. What I'm waiting for is number one, can ETH retest this trend line or trend channel, I would say. So we had this shoulder, we had this head, and we are trying to build this shoulder. If we can break out of it, ETH is going to trend higher. And a price target of around $8,000 is not really something that people should be worried about. I think it's very much achievable. So ETH is looking strong. We are basically trading inside the order block on the weekly chart, the order block that swept the all-time high. So it's a crucial place to be. So I'm looking forward to how ETH reacts here. Any trade that I take on ETH will either be after a deeper dig inside and retest of this channel or a close above 4600 area. So that's my ETH analysis, how ETH is looking at like. And let's go on to Solana. Now Solana, Ali is saying that Solana's $218 is the most important supply wall. So, well, $218 is the most important supply wall, but how many times have we hit those areas? Like, right, let's see where we are, right? Yes, it's a supply wall. Everything is fine. Everything's said and done. We have been trading inside of this channel or inside of this rectangular consolidation from 18th March 2024 onwards. We haven't broken out of it yet. We are still inside of it. For me, what matters is how we react on the mid-level. If we are able to sustain 183, 180 to 170 area, and we can start a bounce back, that is when I will be thinking, okay, now is the time to buy Solana. Because people who have bought Solana in the last, whole year or two, to be honest, year and a half, to be honest, I should say, are still just waiting for price to break out. And it will only break out once the consolidation has completed. Now these were my three crypto analysis, major ones. I don't like to go too much into the minor ones. I like the major ones. So I'm going to stick to that for now. But what I like the most is trade setups. It's stock market. So I'm going to give you three trade setups, three stocks that you can keep your eyes on that are there for you to analyze and buy if you want to. Starting off with Tokai Carbon Co. This is from Tokyo Stock Exchange. A very nice ascending triangle formation. We are about to see a breakout and the confirmation will be somewhere above 1072. A close above 1072 gives you a 7.21% move towards the upside towards 1152, and a stop loss of 1037 is perfect. So it's a nice 2-hour trade, looking beautiful. The consolidation is looking really pretty, so keeping an eye on this. The second one comes from Larsen and Turbo. Inverse head and shoulder consolidation, a close above 3729.5, which for me is now confirmed. So if tomorrow is a gap up open or tomorrow the market basically keeps trading above this area, I'll be doing a long on this, and it's a 2.2 hour with a stop loss at 3614 and a TP at 4009. This is in INR, by the way, and the stock is available on NSE. The last one is the Nasdaq trade, OSI Systems Inc. Rectangular consolidation started off in May 2025. Looking beautiful right now, taking support on the midline of the rectangular consolidation. If we can see a change in state of delivery or a close above the 244 area, it's a nice long towards 275 area, and a stop loss below 227 or 225 will be perfect for this position. So that's it from me, guys. I'll see you again, and we'll be doing some live trading in the London session. We'll be doing some video analysis of charts, and we'll also be having our own community. It's gonna take some time, but we will be there. Have some fun, enjoy yourself, and trade safe. Thank you.